Welcome back to Primary Source China Investment. Peng.guo and I are excited to bring you Show W. We still haven't figured out what we're going to do after Z, so we're open for suggestions. This week on markets, we're going to revisit commodities. You may recall on April 5th, as part of Show E, we discussed commodities in China in renminbi. So today we're going to revisit that after the markets have seen a lot of volatility and a lot of policy interference. Recall that China is a key producer, importer, and consumer of most of the world's major commodities. Therefore, China is uniquely sensitive to supply disruptions and price rises. So all of these commodities are also used in raw materials for the export, which means inflation.
Commodity market, pretty much, I think sooner or later would be the largest future market in the world. Right now, it's like every year, the open interest and the trading volume get soared. And you will see right now the total have 64 commodities listed, plus the options, and they will soon publish like the commodity index product, and that will be very active and the most liquid market. Yeah, China is really focused on the commodities because in the public companies, that's almost 3,600 public companies and more than 1,000 companies that really related to the commodity because it's a manufacturing country. So a lot of the commodity either be the cost or either be the revenue for most of the companies. So in this market, it's right now it's not just for the traditional metal products. You get more and more agriculture and crude oil, as well as downstream related products.
You mentioned crude oil. So recall, China is the top importer and the second largest consumer of crude oil. Over the past 5 years, oil imports have grown by an average annual rate of 10%. Country accounts for 44% of the worldwide increase in oil imports since 2015. So it's a big market domestically. They produce, they use. Also, crude was an interesting commodity over the last few weeks because the China government steps in and released about 20 million barrels from their strategic reserve. It sounds like a lot, 20 million barrels, but that's basically 2 days of demand for the country. But more interesting is the price of crude in the US year over year. So previous 12 months, not year to date, previous 12 months is up 62.6% and 62.8% in the US. And in China, it's only up 12.78%. So that definitely does have something to do with the difference in pricing of the commodity in renminbi in China.
To track this biggest market, luckily we created like the professional commodity indices. We organize the entire commodity world in the China market, give them classifications. So they have a commodity group, a commodity subgroup, as well as each commodity. So it's very easy to track entire commodity market. And also like every year, we calculate the consumption value. Consumption value means the consumption volume times the average price. So we know in the 64 commodities, what's the percentage of each commodity. So we ranked like the top 20, top 10. And so crude oil and thermal coal are the top 2. The crude oil takes the 12% of the consumption value, and the thermal coal is 10%. That's pretty consistent. Those 2 products, I think, is a government or entire market pay a lot of attention to that.
Yeah, you mentioned coal. Coal's important because China is the world's biggest producer, biggest consumer of coal.
That's right. Yeah.
It's not a surprise that the pricing is going to be viewed very cautiously. So just look in the US, price of coal skyrocketed over the last 12 months, up 180%, whereas the price in China is only up 78%, so less than half of the increase in price. So clearly there's policy in place that is moderating this price, either through subsidies, through market intervention, releasing reserves, these kind of things. But demand is very, very high still.
That's true. And the crude oil, copper, and coal, they all connected to the international market.
Right.
And also the agriculture, some of the products that connect to the international market, like the corn, soybeans. So they're really driven by the international price.
Yeah, you mentioned ag products. So we're going to put a chart up of copper also for the U.S. and China, and maybe we'll also put up aluminum too. So those are just some big ones. But you mentioned ag, and that's important because let's not forget, China consumes 43% of the world's pork. It's the world's top consumer. 31% of the world's soybeans. It's the world's top consumer. And 25% of the world's wheat. It's the world's largest consumer.
That's true, yeah. So it's pretty important, as well as this is a big market.
Yeah, so I think the reason we keep coming back to commodities because what you said, peng.guo, it's a big growing market on the mainland and it's traded in renminbi. And we're discussing with some investors right now, how do we get foreign money into this marketplace? Because there is a big and growing market with deep liquidity for now 64 or so commodities.
Generally speaking, it still need to go to the right now that they call the QFII, qualified foreign investors, to get into the market, or you can go to the swap to get the market return. Yeah. And also some of the commodities like the copper, corn, soybeans, crude oil, they're tied to the international market. So right. I think some of the investors might not, they can get the international market to invest directly.
Yeah, but we see the pricing is there's some differences. Certainly if I can buy in China, sell in the U.S. for coal, for example, I would have doubled my money. So if there's definitely some arbitrage. It's a matter of how we can take advantage of it. And we're not going to solve that today. But when we talk about policy today, we're going to get into some of these other issues that central government in China is looking at the commodity space because of this exact volatility and these price differences. So we're going to leave the discussion on markets there for today, and we'll get into policy. So this week on policy, we wanted to revisit the domestic policy for China, because a lot of times we talk about the international or foreign policy for China vis-a-vis the United States or Western economies. And the truth of the matter is foreign policy is really domestic policy in China. Domestic policy leads foreign policy, in other words. So the main policy that I see coming out right now is one of technology self-sufficiency. It's clear that this policy is trying to solve the problems of the tech war. And when the newly appointed Liu He is leading this, it does point to how important this policy is. Also, Xi Jinping emphasized commodity price stability. He also talked about speculation in housing, fiscal stimulus, local government debt, preventing financial crises, and this third child policy. So these are all linked together. It's not that China policy is trying to explicitly hurt U.S. investors. China policy is driven by central government looking around and saying, what are the policies that are going to keep us in place, and what are the policies that are going to make people happy in that order?
That's right. I think make the public happy, or pretty much think about the public interest. Maybe the central government policies goal. I mean, they right now, I think the government just solve the problem every day. The old problem, some of them get resolved, and much more new problem come in. So, and looks like government always solve the most important, most urgent problem. So I don't know why. But from the recent market, you see a couple of the sectors get significantly hurt by the policy. Firstly, from the technical perspective, it's not a surprise because those sectors already show the downtrend since the Chinese Spring Festival.
Yeah, February.
So yeah, it's pretty much recent to here. That really means market smart money is already predict what's going on in that. And also it's not surprising for us because the China market has a higher volatility, and we always prepare for unexpected impact every day. That's why we always promote the uptrend investments. I think right now the real thing is try to solve the generations and the new generations problem. They're facing the pretty much high housing price, and they facing the high medical expense as well as the education cost. So
Yeah,
they're so tired for the or frustrated at the low upward mobility. So they just escaped from the race and live in the low desire lifestyle, pretty much like that.
yeah, that's the problem also when women get when women achieve more financially, they have less kids. You know, just telling people to have 3 kids, it's not gonna, I mean, the 2-child policy in China didn't work. How is the 3-child policy? You know, they're gonna resort
nobody think about the risk to 1 child is still difficult.
Yeah, correct.
Yeah.
So I think your point is they want to solve the problems of the people, and that's obviously the role of government is to do that. Whether you're a communist government, whether you're a free government, you know, all sorts of government, they do have to report to their people in their own way. And if people don't feel like their lifestyle is getting better, if I don't have more and more opportunity, then, you know, people will get disgruntled, and nobody wants the people to be disgruntled. So it's a very basic kind of government model. It's not that complicated. It's not the 4-dimensional chess. It's very simple.
Yeah, I think many Chinese people already realize the problem. They think right now raise a child is really raise a citizen for the country, but the cost is only shared by the individual.
By the individual, yeah. Yeah, the collective is not raising your kid.
That's right.
Yeah, that's a problem. Yeah, I mean, that's also a problem on the ground. Like, our viewers probably don't know that where you live is where you can go to school. And there's a lot of migrants that came to the city that don't have residence there, so their kids can't even go to school. So there's a lot of reform that needs to happen for the practicality of educating your kids. It's not just, oh, let's go screw the US listed education companies. It's a much more nuanced, like most things we talk about, it's a much more nuanced problem.
Yeah, that's analyze the China macro policy is should from the managed country's perspective, and they realize what's the problem, what do they want to do. So that, otherwise it's easy to get a shock or get a surprise for the impact.
Yeah, it's just like when things go too far, then you have this, exogenous, what looks like an exogenous event, but it's been creeping all along. I mean, I can tell you the area that I'm very concerned about is healthcare. In China, in healthcare, there's a lot of problems. If you want healthcare, you have to sort of know the doctor, and you have to pay to play with doctors. I mean, it's a silly healthcare system. So I can imagine at some point in the near future, the healthcare sector is going to have a disruption as well.
Yeah, and it looks like right now at this time, especially recently, the government really started to take the actions. So it's pretty hard to impact a lot of the sectors. So,
we will look for more volatility. Well, we're going to leave it there this week. This is Show W. Happy you're tuning in. Please hit the subscribe, drop us a note if there's any questions or comments, and we'll see you next week.
Thank you. See you.